Hey guys, my name is Joel Sandoval. I'm a CPA here in the city of Bakersfield, California. I own a CPA tax and accounting firm here, and we serve actually not just the city of Bakersfield, but all 50 states. And I'm super excited to be on this podcast, and thank you for tuning in to the Elite Level.
All right, guys, welcome back to another podcast. I'm excited. Today we have Joel Sandoval, owner of Sandoval Tax Services. Been in the business for about 7 years. I'm excited to have him here today just because I have a bunch of great questions for him. A lot of questions that you guys actually had that these were questions from the viewers, by the way. Okay.
Right.
Yeah. So I want to start off with you. Just kind of dive into your background.
Yeah.
And take it from there.
Cool, man. I'm excited to be here. Thanks for the invite.
For sure.
For those that don't know me, my name is Joel. I'm actually from a small little Hispanic town from Watsonville, California. For those that don't know where it is, actually in the Central Coast, not towards San Francisco, but a little bit southern of that. So that's where I grew up, and it's like mainly all Hispanic. It's like all Mexicans, 95% Mexicans, and then like 5% white. So if you were white, you were like the outcast.
The outcast.
It's like the opposite.
Some more Mexicans.
Yeah. I mean, all you see is taco trucks over there and like strawberry fields. And so I grew up in a small town. My parents actually did okay. My mom's actually, they both have a real estate background.
Nice.
So my mom's actually an escrow officer, or was an escrow officer. She just recently retired for First American. And then my dad's a property manager. He still property manages just his own rental properties. They had one like 25 properties is what they manage.
Oh, nice. Okay.
And so they're pretty much just living off the rental income right now. And so I kind of wanted to follow their footsteps. And when I graduated high school, I didn't know what I wanted to be. But I graduated from high school in 2005.
Okay.
So a couple years later, we had a big housing crash. And everyone,
the 08 crash, right?
Yeah, the 08 crash. So everybody started losing their homes. And for me, as a 19-year-old, 20-year-old kid, I was like, damn, I don't know if this is the right move for me. So I actually met a CPA who worked at the real estate place. She was doing all the accounting, taxes, and I didn't even know what a CPA was. I was like, the heck, what's a CPA? Like, my parents do their taxes at the local tax service on a CPA is. So I researched it and I found it interesting. But what she said is like, hey, I have a stable and secure job, regardless of the fact that we're in a recession right now. And so I was like, that's what I wanted as a young kid. Stability, yeah. Okay. I mean, entrepreneurship was nowhere. There's nobody in my family that owns a business or is an independent contractor. That does not exist in my family. So it was not in the line for me. So I went to school. I moved to Bakersfield because some of my family started moving here, lower prices. The houses were cheaper compared to in the Central Coast next to the beach.
Yeah.
So we moved here and went to school. I met my now wife, and she's like, "Hey, this is my hometown. If we're gonna settle down, this is where we're gonna live."
This is it.
So I ended up, we got married. This is my hometown, and then, I just graduated with good grades. So I got multiple offers from CPA firms. Started learning about the CPA world, and as I started kind of doing taxes for bigger businesses, because that's mostly what CPA firms do.
Yeah.
I started kind of dabbing into entrepreneurship because I started seeing YouTube ads from Ty Lopez. I read the book Robert Kiyosaki, Rich Dad Poor Dad, and so it just opened my mind to this whole new world. And I was like, one thing that kind of stuck in my mind is hey, why do you want to climb the corporate ladder when you can own the corporate ladder?
Yeah.
And I was just that makes a whole lot of sense. There's going to be a ceiling as to how much money I can make. And so, but I was scared, bro. I was because I was getting paid pretty well. I was getting paid at the time. I was maybe making $75,000-$80,000.
Yeah, which is really good, bro.
And how old were you at the time?
At the time, I was probably 23.
Okay.
23,
So you're young, making big bucks.
Yeah, at the time it was big bucks. Especially with inflation, that would have been 80, 90 grand today.
Yeah.
So I mean, it was, and then so, but I was just man, there's just there's just so much you can do, right? And then I started just helping family and friends with tax returns, and I kind of liked it, and I saw the impact that I was making. And one day, my boss actually, I was working for the man, actually for a big real estate developer. They've actually moved now, but they were developing a bunch of apartment complexes here in Bakersfield, and there's still a whole bunch that they've built. Yeah. And so I was kind of the finance manager behind the projects. And one day he kind of pissed me off because it was 5 o'clock on a Friday and I had to run a quick errand, 45 minutes. And I came back and he was like, hey, where's my project that I need done? I was like, oh, I had to run a quick errand, but I'll get it done right now. It should be done within the next hour. And he's like, dude, I've been waiting for you. He's like, never let your errands come before my business. And as an employee, I felt undervalued. I was like, really, bro? Like everything that I do for you, you can't even run a quick errand?
Yeah.
Right.
And that for me was the push point because I was always trying to have a certain amount of money in the savings account before I started my business. And it was just like, that was never going to happen.
Yeah. Kind of
so,
like waiting for the right time.
Yeah,
right?
there's no such thing. Yeah, there's no such thing. So I ended up just putting my 2 weeks. That next day on Monday, I ended up getting let go. And I started my own firm, Sandoval Tax, the next day. And I remember when I started my firm, I put a sign up front. I was like, they didn't know how to advertise. I didn't know anything about business. So I just put like balloons, like, hey, taxes. And then I got there at 8 o'clock. At 10 o'clock, my wife called me and said, hey, how's it going? And I was like, how many customers do you have? I'm like, you're my first phone call.
The wife.
Yeah. I was like, yeah, I mean, and she's like, oh, maybe you should go back and ask for your job. And I was like, hey, give me a minute. It's only been 2 hours. And so, I kind of had I still had my family and friends, so I had a little bit of income, but after expenses, I was losing money.
Yeah.
And so, but I was like, you know what, I'm going to do whatever I can. And then a couple weeks later, we found out that my wife's actually pregnant.
Oh, nice.
And then she always wanted to be a stay-at-home mom. She's like, hey, so that was kind of like her dream. So I was like, hey, at the time she was a 4th grade teacher. She was bringing in a steady paycheck. And she's like, hey, you've got 9 months to make this work. And if your business doesn't work, you have to go back and get a job.
Yeah.
And I was like, man, I don't really want to do that. Like I've already done that. And so, dude, I just put my head down and just started working. 9 months later, I was able to bring enough money to the table to put food on the table. And then fast forward to today, now we have a 7-figure accounting firm servicing not only Bakersfield, but all 50 states. And we're growing and super exciting.
I've seen that, man. If you don't mind me asking, I see you have a team.
Yeah.
What's the team look like? How many staff members do you have?
Yeah, so we have 17 people.
Oh, nice.
Yeah, those 17 people, the majority obviously accountants. So I have a tax department that basically focuses on saving business owners money. Then I have an accounting department that helps business owners with like tracking their numbers. So making sure that, they got their ducks in a row, making sure that, they know how much money they made.
Yeah.
And then, so those are my 2 departments. And then I got a marketing and admin team that help me with all the administrative stuff as well.
I got you. Okay, so backtracking a little bit to, obviously your wife gave you 9 months, right?
Yeah.
In those 9 months during that process, I mean, would you say that there was a time where you're like, fuck, this is probably not going to work out. I should reconsider. I should probably look for a job.
Yeah.
I mean, how did that go for you?
So for me, I was like, the kind of person I am is like, I'm very goal driven. So I've always it doesn't matter what it was. Like when I was a little kid, if I was playing video games, I'm like, dude, I'm not going to stop playing this video game until I get to the next level.
Yeah, I got you.
So that's kind of how I was. So I was like, hey, you know what? I got to make this work 9 months from now. Like there is no going back. Like I'm going to make it work whatever it takes. So I was working 7 days a week, no days off. I mean, pretty much like doing everything that I could to like make sure that I didn't go back.
When did you actually start seeing some kind of income though? Because, as a business owner, you don't really typically see, I guess the rule of thumb is like 2 years.
Right.
Right. Within, 2 years, sometimes you don't see any income.
Yeah.
When did you start seeing income in your business?
You know what? It was kind of a gradual process because like everything that you're making, you're reinvesting it back into your business.
Yeah.
Right. So like, the little income that I had, I was like, oh, I'm going to use this towards a Facebook ad or whatever, or maybe, a sign or something to help me get more customers. And so I didn't really start taking any money out. I was just taking enough money out to like eat. Yeah, like just taking money out to eat. But the rest was all being reinvested until I would say probably like, for me, it was like year 5 where I was like, let's use some of this money to go on vacation.
Nice.
Like just enjoy life now. And so, I mean, the first 5 years, I was like taking no money out of the business.
Yeah. So 5 years basically you can honestly say where you started seeing, okay, good. See, I'm glad you said that because a lot of people, that go into business for themselves and, we talk about it all the time, bro. You never want to go into business for money because if that's what you're doing it for, you're going to be really upset, man, because it takes a long time to make money. And if you're obsessed with the process, you're going to figure out ways to continue to grow until you get to that point. So 5 years is a long time, man. And a lot of people don't see that. Now, let me ask you this, because you mentioned you had family members support you and some friends. Did you ever have family members or friends not support your business? Where you're like, damn, these guys went somewhere else. They could have gone with me. How did that make you feel if that was the case?
Yeah, I mean, I don't think in the beginning, like most of my family did support me actually because they were like, "Hey, this is the first like person in our family that's actually trying to do something
Like
like
being
an
Nice.
entrepreneur." Yeah, so I had a lot of support. Like I was doing tax returns, but then as I started actually getting more clientele, I started raising my prices, and they were like, "I don't know if we can support you now," you know.
So actually,
Yeah.
one of the things that you were talking about previously, it's you were working for you were working as a tax person, and then obviously you started to get into the CPA side of the business,
Yeah.
right? So when you went, you opened up your own firm. How did you go and promote yourself? Did you say, "Oh, puedo hacer taxis," or did you say, "Oh, I'm a CPA and I can help you as a business owner save money"? How did you?
Yeah, I mean, to
kinda
be honest,
put
I did
yourself out
not
there?
know how to like, I didn't even know what it meant to differentiate myself or like how to market myself.
Right.
Because again, I didn't have anyone to like to go to like for advice.
For coaching?
Yeah, for coaching. So I
Okay.
actually ended up the first person I ever hired was an actual coach.
Nice.
And I remember he asked for 10 grand to coach me for the whole year. And what caught my attention was that he actually said, "Hey, I built a back in the 90s, he built a $4 million tax company, never having to learn how to prepare a tax return." And I was like,
That's
wow, I was
interesting.
like, dude, I'm killing myself preparing tax returns and I'm not even making anywhere close to 4 million.
Right.
Yeah.
And I was like, he's like, he asked for 10 grand for his coaching. And I was like, man, that's like all my profits.
Did you fork it up?
I did, bro.
Yeah.
I did, but I remember I called my wife because actually he pitched me. I went to a seminar actually, so I went to a seminar. I think it was in Florida.
That's where it always goes down, bro. The
Yeah.
seminars.
Yeah.
Sure.
Yeah, so I went to a seminar and then it was like a 3-day seminar. I was learning all this stuff and I was like, dude, this is so valuable, you know. And then he's like, hey, if you want to learn more and you want to be coached, it's going to be 10 grand. And I remember calling my wife and I was like, oh, I got to do it. I got to do it. And then she's like, how much? I was like, 10 grand. And I was like, it's up to you. She's like, whatever you do, I'll support you. And I was like, screw it, you know. So
Yeah.
I did it. And then that's when I first learned ROI, bro, because that 10,000 like turned my business from I was making maybe 100,000 into like the next year I made like 400,000 with my.
So you would say it was a good investment?
Oh hell yeah,
All day
10,000 for 400,000.
See, because a lot of people they think like, fuck, $10,000. I'm gonna spend that much
Yeah.
money. Why would I do that? Like, when
Yeah.
are you gonna teach me that? And see, the thing is that I guess what people don't understand is the wheel has already been invented. I
Right.
say it all the time, bro. You don't go and have to reinvent the wheel. Someone can just show you the way that it's already been done.
Right,
Instead of you trying to figure it out on your own, because whatever this guy learned in 10 years, he can show you in one.
right.
Right?
For
So
sure,
so
yeah.
so the 10,000 was worth it for sure.
Oh, for sure, man. And I think that's what like I basically learned as much as I could from him. And like I think I hired him for 2 years.
Oh, nice.
Yeah,
Okay.
so I had him for 2 years, and after those 2 years, I was like, man, I kind of squeezed everything that I could out of him.
Mhm.
So then I met another coach, and he was actually he asked for 25 grand.
Oh, nice.
And I was like, oh shit, I'm used to paying 10. So I was like, screw it, I did it. And then that took me from I was making 400,000 to then having $1 million firm the next
Nice.
year.
Nice.
So I just like, then I started to learn how to like market myself, how to differentiate myself, how to actually provide value to customers,
Yeah.
how to sell, all those things I didn't know how to do. I just knew how to do a tax return. That's all I knew before.
Nice.
So would you say the coaching is what helped you level up in your
100%.
business?
Yeah,
Okay.
100%. Coaching for me, that's what I give like all my credit to.
Okay.
Obviously that and hard work, but
Of
I
course.
already had hard work before that because I had a high paying job. So
Yeah.
that was already in my nature. What I didn't have is the skills to grow a firm or I wasn't an entrepreneur. I don't know any of
100%.
that
I
stuff.
got you.
Would you say now, would you be willing to get another coach? Do you still get coached, or how do you?
Yeah, I
operate
mean, I
yourself?
think I would still definitely be down to get coached, but I think now I'm more strategic. So
Okay.
like I want to make sure that if I'm going to hire someone that they're actually going to get me to the next level, right?
Right.
So I'm not going to just hire anybody just so I have coaching.
Yeah.
I want to make sure like, hey, this guy is actually like there'll be a specific skill that I'm looking for. Like
Yeah.
right now, what I'm actually interested in doing is acquiring other firms, other tax practices. So I'm
Gotcha.
trying to invest in a coach that like, oh, I bought 20 of them, and this is
Right.
how you do it.
Yeah.
Gotcha.
So basically, yeah, you're looking for a specific something before you invest.
So you go and study these guys, right?
Yeah. It's like I'm not gonna just throw my money at him. It's like this guy has the knowledge that I need in order to get to the next
Yeah.
level.
Basically, you gotta look for somebody that is in a position that you want to be in.
Yeah.
That's what it is.
Yeah,
right?
100%.
Okay. Cool. Now, earlier we were talking about it, how to
Differentiate yourself.
differentiate yourself between a CPA and a tax preparer. A lot of people don't understand the difference, bro. I know this is probably common knowledge to a lot of us, but can you explain what is the difference between a CPA and a tax preparer?
Yeah, for sure. So a tax preparer, I mean, it's like I didn't even know what a CPA was either, right? So when a tax preparer, the way I describe it is like, especially the way my parents still do their taxes, like they get all their tax documents, they make an appointment with, the tax person. They go, they take all their stuff, and then like an hour or 2 hours later, here's your taxes, they're done.
Yeah.
Right. And then hopefully you get a refund, maybe you owe money, but you don't really know what happened.
Right.
Right. A CPA, it's more like a relationship that you're going to build with a professional who understands the tax laws.
Mhm.
And it's more meant for someone who's actually like a business that owns a business. Because once you own a business, you have so many things that you can do to write. You can write so many things off. There's so many things that you can do to actually pay less in taxes. And so that you're going to build a relationship with a CPA that's going to help you grow your business in the right way. You want to make sure you're set up correctly. Like, should you be an LLC? Should you be a S corporation? When you go get your taxes, then you're not going to have this conversation.
Yeah.
You're just getting your taxes
Yeah.
done. So you're actually getting advice. So you're going to like build a relationship with someone for the long term. And it's like, you want your CPA to grow with you. So that way, when you have if you're an entrepreneur or business owner, you want to grow, you want your CPA to be able to grow with you. So that way you can like make sure like, hey, for example, I'll give you an example. There's someone who started a business that I met that basically he barely started, he had one entity, which was an LLC. And he's like, now that I've grown my business to 8 figures and 9 figures, he's like, now I have 25 LLCs. He's like, could you imagine how happy my CPA is, all the tax returns he has to do for all those 25 LLCs?
That's a lot.
Yeah, so he's like, but it is because of the relationship that I have with him, and so you're not going to get that type of advice with just tax preparation.
Gotcha. Yeah. Okay. See, and that's actually good that you brought that up. That was my next question. So, there's a lot of people that I have that follow me, that watch the page, and a lot of them are business owners, right?
Right.
Why should somebody incorporate themselves, and why is that important?
Yeah, for sure. I mean, the main reason, honestly, is because you want to like protect yourself from a lawsuit. Number one,
Mm-hmm.
because when you're in business, I mean, you're likely to get sued at one point. Actually, I think Ty Lopez said like if you the moment you get sued is the moment that you know that you've made it.
Yeah, you're doing something right now.
Yeah, because it's like
I have like 3 going on right now at the same time.
It's like because you just have so much things going on, right? And obviously you want to limit those, but the way to protect your ass, especially when you start acquiring like rental properties and you start acquiring a portfolio of stocks and you have money in the bank, it's like, dude, you don't want to lose all that.
Yeah.
So you want to protect yourself. So you want to have an LLC or a corporation to protect you, because once you have an LLC, whatever's in there, and if you were to get sued, they can only come after the LLC. They can't come after your personal assets.
Gotcha.
So they can't if you have like your home, and if that's not in your LLC, they can't come after your home. Just whatever is in that LLC. And that's why you want to have multiple ones. And then besides that, then obviously there's ways to save money on taxes using those entities as well.
I got you.
So in a sense, it's basically like another identity at that point, right?
Yeah.
It's technically another another person that's
Yeah,
it, right?
it is. It definitely is, because that entity actually will get its own tax ID number. It'll apply for it will have its own credit score. It can apply for it. You can buy vehicles. It's like not owned by you. It's owned by the entity.
Okay.
I got you.
Yeah.
And typically when somebody is looking to get incorporated, how do they go about deciding which entity is best for them? Are you the one that decides that? Is it the client that decides, I want to go and open up an LLC?
Yeah.
Or how do you go about?
So I honestly, I think it depends on where you're at in business. So if you're just starting out, I would say like if you're this is what I believe. If you're making less than $250, or let's break it down. If you're making between $0 and $50,000, you're probably okay as a sole proprietor, because LLCs have to file separate tax returns. They have a lot of compliance requirements.
Yeah.
There's a cost to them, and you're not generating enough money yet for it to make sense. Once you're making between 50 and 250,000, okay, now let's set up an LLC.
Okay.
And an LLC, I think, is the right entity, because when you're in that, you don't have as many compliance requirements either compared to a corporation. And once you're above 250, now you might consider an S corp, because an S corp can save you money on taxes, but now you got to set for yourself on payroll. You got to have financial statements. I mean, there's just a lot of things that come along with that. So what we usually do is say, okay, if we're going to set up an S corp, how much money is it going to save you?
Yeah.
Is it going to be more than the cost to operate this entity? Because if it's going to save you more in taxes than than the cost, then it 100% makes sense to do it.
Yeah, I got you.
Yeah.
See, and that's what a lot of people don't understand. When you even decide to go that route, there are differences between each and every single one of them, right?
Right.
So obviously, you know, like you said, if you're just starting out, then you're probably better off with an LLC. I know you kind of just touched up on it a little bit right now, but what are the differences between an LLC, an S corporation, and a C corporation?
Yeah. So, well, let me start with the sole proprietorship. So when you say, hey, I'm a business owner, or if you're like a real estate agent, it's like most of the real estate agents are 1099, right?
Mm-hmm.
So they're by default, they're a sole proprietorship, which means that you're not an entity. You're just doing business under your social security number. And then you as a broker, 1099, they're social.
Yeah.
And they got to do taxes, right? So then an LLC is actually not a tax entity. So an LLC is actually just gives you limited liability protection. That's why it's called an LLC, limited liability company. So then that LLC has to be taxed as either a sole proprietorship, an S corporation, a C corporation, or a partnership. And so by default, when you have an LLC, it's taxed as a sole proprietorship.
Yeah.
So it's taxed the same way as if when you were 1099. So, but that's probably okay because when you're an LLC that's taxed as a 1099, you don't really have to there's not really any compliance requirements. Like all you have to do is just your tax returns every year. And then if you live in California, you just pay the $800 every year. And that's pretty much it. But once you have your LLC turn into an S corporation now is a small corporation that is required to you have to pay yourself on payroll. So then you also have to have a separate set of financial statements, meaning like you can't just do your taxes the same way. You got to have it's its own entity, as we were talking about. So but then the best thing about S corps is that they don't pay any self-employment tax.
Yeah.
Because LLCs that are taxed as a sole proprietorship and sole proprietorships pay an extra 15.3% in self-employment tax.
Nice.
So when you're an independent contractor, you're paying an extra 15% in tax that you don't have to pay if you're an S corp. But it does come with compliance requirements. So that's like, all right, well, is it worth it?
Yeah.
Right.
It has to be worth it at the end of the day.
Yeah.
So for a real estate agent or for a business owner, again, making over $250,000, right? They're making good money. You suggest, I think at that point, from what you're saying, is basically go under an S corporation, and do you suggest them to W-2 themselves?
Oh, you have to actually. Once you're an S corp, you have to be on W-2. It's one of the requirements of being an S corp.
Mm-hmm.
So 100%, it makes sense because I mean, if someone is not an S corporation, I've seen business owners save up to like $40,000-$50,000 just by changing into an S corp. Like they don't have to do anything else besides, and then you just have an extra $50,000 in your pocket.
Nice.
So I mean, those are the type of things that a CPA like myself can do. It's like, hey, how much money is it going to save you? And then this is our fee, and obviously we want to make sure that we save you more money.
For sure.
Right.
Yep. For sure. And then I kind of want to touch up on this one, bro, just because a lot of people talk about it. That, like if it's a strategic, way to go, or a strategic plan.
Yeah.
A lot of people say this, and you can correct me if I'm wrong, or correct the people that say this, because I don't believe this is true.
Okay.
But a lot of people say that you can establish a corporation outside of the state. Just an example, like Nevada.
Yeah.
You establish a corporation out there. You say that your business is out there, but you're operating in California, and they do that to avoid California taxes.
Yeah.
Can you do that?
No. The only way you can do that is if you actually were doing business in Nevada.
Okay.
Because California knows basically where your business is operating. So it doesn't matter if your entity is formed in Nevada, Texas, Florida. If you're doing business here, then you're going to get taxed here in California. So that's why a lot of people actually moved out of California because it's one of the highest.
I'm going to Texas right now.
Yeah. It's one of the highest states that, that pay taxes. So unfortunately, that strategy won't work.
Okay. So what would you say would be the benefit of trying to go in and open up a corporation elsewhere and then, bring it here to California? I personally have heard that it has to do with, it was called something piercing.
Corporate veil?
Yeah, the corporate veil, correct.
Yeah, so it's actually not related to that. So the main reason that you want to set up an entity in a different state is because of actually privacy reasons.
Okay.
So, for example, if you form an entity in California, California is required to tell you who the owner is. So you can literally go in and I could search, whatever corporation. I know exactly who the owner is. I know where they live. I know everything about them.
Nice.
And so if that entity is like in Delaware is actually one of the entities or one of the states that has the most privacy rules. they won't release any of that information.
I got you.
So if you want to if you're let's say a big investor, right, and you have a lot of money and you're investing into all these LLCs, but you don't want people to know you got all this money because you might be a threat to hey, this guy has a lot of money.
Yeah.
How do you protect your privacy? Well, you form an LLC in Delaware and then you use that LLC to invest in, it could be in California businesses.
But you still got to go and pay taxes wherever you're doing business.
You still have to do, because they're going to source it to wherever the income's derived.
So no getting rid of the California taxes.
Nah, unless you move out of California.
Unless you move out and operate.
Yeah.
Okay.
Yeah.
So next question that I have, and this is a pretty obvious one, and I think I heard you talking about it in the last podcast. So business owners that think they're cheating the system, okay, and I'm telling you because we deal with this a lot. When business owners come to us, they tell us, man, I'm looking to qualify for a home. I make $400,000 a year.
Yeah.
I'm like, great. Let's see your tax returns.
Yeah.
50,000. And I'm like, dude, what the fuck? How's this even possible?
Yeah.
Oh, it's because I'm cheating the system, man. I don't report everything.
Yeah, I ain't trying to pay taxes.
Do you recommend people write off a lot of crap on their tax returns? I mean, what's your thought on that, I guess, is my question.
I mean, my opinion is that you need to be honest. There's a couple of reasons. One is if you actually are honest, you're gonna sleep better at night. You're gonna have peace of mind. If the IRS knocks on your door, you're like, dude, go ahead and look whatever you want.
Yeah.
They have nothing to hide. So you're gonna have peace of mind. And then two, you can still pay $0 in taxes even if you report all your income. I mean, why is it that Amazon made billions of dollars yet paid $0 in taxes in 2018? Donald Trump made billions of dollars yet only paid $750. Obviously, there's ways to do it legally.
Right.
So instead of trying to cheat the system, why don't you learn the system?
Right.
Once you learn the system, it's like you're not going to have any problems qualifying for a loan. If you make $400,000, boom, I make $400,000. And guess what? I still paid zero.
Right. See, one of those, and I think I had mentioned, you had mentioned it in one of your podcasts too. There's over 47,000 pages, right? With a bunch of, technically cheat codes, right?
Yeah.
Legitimate cheat codes ones that you can utilize to be able to write off all kinds of crap, and at the same time you're still showing your income on your tax returns.
Right.
And for instance, one of those, we had talked about it last time, the 6,000 pound vehicle write off. Can you explain kind of how that works? So you got a 6,000 pound vehicle.
Yeah.
How does that write off work?
I mean, it's one of my favorite strategies. So, and actually you want to do it last year was even better than this year. Because when you buy a vehicle that weighs more than 6,000 pounds, at least last year, you bought a vehicle that weighed more than 6,000 pounds, you can write off the entire purchase price, regardless of whether you put any money down. It doesn't matter how much money. You could have financed the whole thing, got a loan for the entire vehicle.
Right.
If it costs you $200,000, let's say you buy a Bentley, right? One of them that weighs 6,000 pounds, and it costs you $300,000, and you got a loan for it at the end of the year. You didn't pay any money down. It's all financed. All you did was sign a contract.
Yeah.
That's all you did. You just got a $300,000 write-off by just signing the contract.
Nice.
And so if you made $300,000 and you just bought a vehicle for $300,000, on paper your income just went from 300 to zero. So when you have $0 in income, you're going to pay $0 in taxes. So now by me signing a contract for this vehicle, which now I can use for social media and grow my business and put in my background on my social media stuff, make me more money, I got this $300,000 write-off.
Nice.
And the best thing is when you go to the bank or a mortgage broker, they're going to be like, hey, you didn't make $0. Yeah, on your tax return shows $0, but you bought a vehicle, so we're gonna add it back. So we're gonna actually see that you made $300,000. So you're gonna qualify for a loan using $300,000 of income.
Nice. It's legit income.
Because it's legit income. Yeah, it's like you didn't actually spend $300,000. You just signed a contract.
So assuming that I'm one of the viewers and we're looking at you and say, hey, you know what? I'm a business owner. I make $400,000 a year. I want to go to you because I just heard you say that you can save me money, right?
Yeah.
What if I went to you today and then said, hey, can you save me money on my taxes that I haven't filed yet? How do we go about that? And is that something that you're able to do? Or is there something that we have to work on before we get to that point?
So that's why you need to be working with a CPA from as soon as you can afford one.
Yeah.
Because it's very hard to save you money for last year. For example, if you want to save money for last year, I can't say, hey, let's go in a time machine and go buy a car.
Right.
It's not possible, right? If we would have met last year, I could have given you that advice.
So you go and tell people, go buy a car.
I mean, if it makes sense for them, right? I don't want them to go buy a car foolishly, but if they need a car or they have the money, they have the cash flow, I'm like, would you rather give the money to the government or have something to show for it?
Absolutely, yeah.
Right? So it's like, you're going to have to pay the money anyway. but why not have something to show for it?
Yeah.
So yeah, I'll tell people that. But there's other things you can do as well. Like if you don't, let's say I'm like they're not a car person. Well, you could put money into retirement. You could put like up to $60,000 in a solo 401k and have that be deductible. And that's not gonna like you can invest it even like depending on your risk level. You could put in something that's very risk averse where it's not going to lose any value, or you can, what, I'm willing to take risks. That 60,000 is going to turn into 100. You can invest it into like stocks, and so now that's also deductible. So maybe instead of buying a vehicle, you put it into your retirement. And in my opinion, you should be doing everything like have retirement, have the car, have the LLC. It's like, dude, like use all 47,000 pages to your benefit.
Absolutely.
Don't just use one page.
Yeah.
Use all 47,000 pages.
Absolutely. Going back to that guy that you said had like 25 LLCs, because this one's important, right?
Yeah.
So basically, from what it sounds like, he's strategizing the way that he's, I guess, protecting himself, right? So when would you recommend somebody to get, let's just say we got a corporation right now, an S corporation, right?
Yeah.
When would you recommend a person to get a second, third, fourth, fifth, sixth LLC? When would you recommend that?
So it really depends on the business owner itself. And I would say once you start venturing into like other businesses.
Yeah.
So like, for example, if you own a real estate brokerage, right? If you started to actually become, let's say, a real estate investor now, I would say don't use your S corp because you don't want to put, your business at risk.
Right.
Your investments are different from your business. So now you're going to create an LLC for your investments. So anytime you start a new business, that's when it makes sense to actually create a new entity.
Like, for instance, we start accumulating a bunch of rentals. It would not be a smart idea to get those rentals and put them all under one corporation.
Definitely not.
Right?
Now, especially the one like your operating company, like let's say like your cash cow is your real estate sales. You want that to be completely separate from your real estate investments.
Got you.
Yeah, because it's like you don't want to like put those at risk. They're two different, and also not just that, you actually put yourself at risk for an audit. Mm-hmm. Because when you do your tax return, it asks for an NAICS code. It says what business are you in? So you could put real estate sales, but then you have real estate investing in that entity. It's going to throw the numbers off. It's going to cause a red flag. Yeah. So you want to have an entity that says real estate investing. You have an entity that says real estate sales. So you want not. It also helps you not get audited too.
Got you. I got you.
Yeah.
Something that I kind of want to throw out there too that I think it's super crazy, and you can kind of let me know if this one's true. So the IRS, from what my understanding is, they want you to report anything, right?
Right.
So I heard, and you can correct this one too.
Yeah.
I heard even if you steal some shit, you got to report it to the IRS if you make money on it. Is that true?
That is true. Unfortunately.
That's crazy, bro.
Yeah, I mean, there's even like a law when when marijuana was illegal, it said if you make income from like drug dealing, it needs to be reported on your tax.
You know what?
IRS is a real mafia.
Yeah. They don't care when you're getting your money. They want to
report it. Yeah, they just want you to report it. It's crazy, bro. And it's like they're saying like, hey, we're not gonna report you to like the authorities. We just want our income tax.
Nice. The real mafia right there.
They don't mess around.
That's crazy.
That's crazy.
Okay. And if somebody did decide that they wanted to get incorporated, how do they even go about that? Is it something they go online and they just start shopping on Google? Or,
I mean, you could always do it online, right? Like
any websites you would recommend? Or?
So if you do it, I mean, it just depends on where you're at in business again. And that's why I recommend you talk to a professional. If you're just starting out, just do it yourself, like on LegalZoom. LegalZoom is a popular one.
Mm-hmm.
But if you're already bigger, you don't want to form an LLC or an S corporation because it's like, well, if you're making a lot of money, you want to make sure you're choosing the right one.
For sure.
Yeah, so it's like, I'm not going to do it myself. After a certain point in business, you're going to be like, I have to rely on professionals, right? And that's when it makes sense to reach out to someone like myself or an attorney as well. Sure. You probably want to reach out to both, to be honest, because a CPA will give you like best entity from a tax perspective, but then you might want to talk to an attorney. Well, this one's going to give you more liability protection.
For sure.
So like, I have a client of mine who's in the solar business and they're starting to branch out nationwide. And so they were like, and they were going to get all these independent contractors. And then he had all these legal questions. I'm like, I'm not the person to answer your legal questions. Like I can tell you which entity is going to save you the most money in taxes, but all these legal questions, I refer them to an attorney.
Okay.
So you kind of have to work as a team, and eventually you're going to have a financial advisor that's going to help you with your retirement, life insurance. And then you want to have a real estate professional that you can go to for, real estate investments. I mean,
we're right here.
Yeah, exactly. You want to like an army of professionals.
For sure.
I mean, it's like if you think of like Donald Trump or like some of the most successful people, it's like they're not making these decisions on their own.
Right.
Absolutely.
They've got a team of like CPAs. They've got a team of real estate professionals. They got a team of everything. Like they don't even. They just have to like sign off. Like, yeah, it looks good.
Numbers look good.
Yeah, that's all they're doing because they're just so busy that they have those other people making those decisions for them. They're just like, cool.
That's
Looks like a
crazy,
good
bro.
deal.
That's crazy. Well, I mean, another question that I do have for you, man,
Yeah.
is obviously in every industry, it's very similar to like cops. You got good cops, you got bad cops.
Yeah.
Doctors, same thing. You got good doctors, you got bad doctors.
For sure.
And real estate is absolutely no exception, as I'm sure the CPA industry isn't either.
Yeah.
How can someone go about finding a good CPA? Because I've heard, and to be honest with you, I'm not gonna lie, bro.
Through
We've experienced it.
experience. Yeah,
Okay,
through
we've experienced it. We've gone through a few CPAs, bro, and there's some fraudulent shit going on. You know, like
Yeah.
it's crazy. Like,
Yeah.
how can somebody find a good CPA? I know we got my boy right here today. Obviously, we already found him for you guys, but
Yeah.
for anyone else, how can they find a good CPA knowing, like, you know what, this person's not going to screw me over?
Yeah, or he's doing the right
He's
thing.
doing the
for
right
us.
thing.
Yeah.
He really truly cares, because there's people out there, they'll talk, man, a good show, and once you get down to it, it's like, I haven't talked to this guy in a year. You
Yeah.
know? How can you find a good CPA?
So honestly, this goes to I think not just in CPA but anything in life. Like
Mhm.
what the number one thing you got to do is your due diligence, right?
For sure.
You have to do your research on what you're going to invest your money with, right? So you want to do your investigation. If whether you're hiring a doctor or you're hiring anybody, like you said, in any industry, there's good and bad.
Yeah.
Right.
So it's like you want to do your research. And so that way, when you're like, you know what, this guy, like all his reviews, like they all look legit. He has 5-star reviews on Google. I had a consultation with them. Like we hit it off. You know, I kind of like the vibe that we're getting.
Yeah.
And when after you've done your research, and it's like, hey, you know what, you just have to trust your gut at the end of the day, right? But I think the more research that you do, the more due diligence that you do, the less risk that you're gonna have because
Gotcha.
you know you're making the right decision. And so the less, if you just kind of jump on the gun without doing any research, then it's like, well, you could actually end up in a bad situation
For
because
sure.
you didn't actually spend the time to do, your due diligence.
Right.
Absolutely, yeah.
So assuming that I'm a client, right, and I'm
Yeah.
looking, to go and consult with you because I've seen, you do a really great job, and I go and I meet up with you. Are you going to be the person to come and sit down with me? Because I know you've already gotten to the point where you've established this team.
Right.
And so how do you go about actually letting your clients know, hey, you know what? I'm not going to be the person to go and sit down with you, but
Right.
it's going to be my guy, Edgar here, that's going to sit down with you and he's going to show you everything.
Right.
And, how do you even build that trust with somebody when they go to you, but yet you revert them to your team?
Yeah, that's a good question. I think that's one of the biggest challenges, I think, especially for like a professional service business,
sure,
right?
right.
Because they want the advisor, right? This
Right.
like, I want the doctor who's going to give me the service.
Yeah.
I want to talk to him,
Mhm.
right? I don't want to talk to the nurse.
Right.
So that's always been a challenge, but I had to break out of that because in the beginning, like everyone wanted to see me, and I was like, man,
100%.
I only have 24 hours in a day.
Yeah.
There's only 7 days a week. There's only a certain number of clients I can serve. Like I'm not going to grow my business.
Absolutely, yeah.
And so I had to figure out a way to like introduce them to my clients. And so the way I've done it personally is like, hey, you know what? If you ever have any problems, like I'll be available. I'm gonna make sure I'll step in if you have any issues. But I can guarantee you that when you meet this person, you're gonna be satisfied.
Yeah.
Just come to me if there's any issues. And then 99% of the time they never come to me. Because I introduce them to one of my right hand person.
Yeah.
Like I trust them with my money. Like
course.
it's like, dude, I can give them access and I know that everything's gonna be fine. So when I have that much trust in that person and I'm telling them, hey, you're gonna be in good hands, and that's coming from me, they're like, all right, Joel said that I'm gonna be in good hands. And then when they experience it, they're like, man, she's awesome. Like,
Yeah.
dude, she's taking care of me. Thank you so much, John. Those are the feedback that I get. It makes it so much easier. And then they start having word of mouth about her as opposed to me. Now it's
Yeah,
like,
that was my next question.
Yeah.
How do you handle that, bro? Because I'm in a very similar position right
Okay.
now where I have a lot of clients that reach out to me or people that are interested in buying, selling. And I'm in the same position to where I'm not the person that necessarily, handles them one-on-one. I trust my brother with everything, and I trust a few other people that we have here. So we have a team established.
Like a little system.
yeah,
And obviously, since I'm not the one working those leads, they build relationships with the people that I connect them with.
right.
they start referring people out to them.
Right.
You know, does that affect your business? How does that help you? I mean, what are your thoughts on that?
I want my team member to get all the leads, to
For
be
sure.
honest, because I have such a strong relationship with my manager, with my team. It's like I want them to win.
Yeah.
So if they win, they're going to be more loyal to me.
That's what I wanted to
So
hear.
if they're
right
winning,
there.
you're winning.
Yeah, exactly.
We all win.
Yeah, we all win. So it's like the more that they win, it's the more loyalty they're going to give me.
Absolutely.
It's like, dude, why would I go anywhere else?
See, and that's the mentality of being a team player.
Yeah.
And
Right.
that's what I always instill on these guys. And I tell them, look, I can do this by myself, but I'm going to be limited as fuck. You know, like
Right.
I'm just going to be up until a certain point, up until what I can handle. But if
Right.
we do it as a team and we have a team mentality, then honestly,
Sky's the limit.
Sky's the limit, bro.
Yeah.
Like we're going to be able to kill this shit together. You know what I mean? And it's not even like, it's an amazing feeling, honestly.
For
When
sure.
one person makes money, we all make money. I
Yeah.
think that's the best feeling ever because it continues to, you know, increase momentum and
Mm-hmm.
Yeah, 100%. I think I would even add, like, I was having this conversation with my dad, and I was like, hey, I'd rather make 20% and off my team than 100% for myself.
for sure.
Because if 100% of myself requires my time, my energy, like I can't be with my family now.
Mhm.
I have to be here working. It's like I can't be anywhere else because I'm the one that has to deliver the product.
Right.
It's like, dude, I'll give you an example. I remember during COVID, I was sick. I got COVID and I was sick for 3.5 weeks. And I couldn't do anything. Like I was just laying in bed. I had a fever that was like over 100 degrees. I lasted over a
Yeah.
week. Like I was just in bed. That's
Mhm.
it. Like it took me 4 weeks, like almost a month. And I remember when I was in bed, my sales rep, he's like, "Hey Joel, we just got a new client at $2,600 a month." I was like, "Shoot, dude, I'm making sales without, I'm over
While
here."
I'm in bed.
Yeah, well, I'm in bed, sick, trying to recover. And they say, "Hey Joel, we just landed another client for $1,000 a month." And I'm just like, dude, there's sale money coming in, and I don't have to do anything.
Yeah.
I just have I have the team. Obviously, I'm going to take care of them. And then I think that's the best way for you to like actually have passive income. I think, which is everyone's goal. I think at the end of the day, it's like if you want to be able to have freedom. To me, freedom is more important. Free time is more important because then that's when like there's a guy that says you have FU money, right?
Yeah.
Where it's like you could say like, dude, I don't need your business.
Right.
I don't need your business.
I like, you know what? You get to a point, bro, where you
Yeah.
do. Yeah, F your money feels good.
It
Yeah,
does,
like,
yeah.
we have some clients that are, they can be a little special sometimes, and it, like we'll work with everybody, bro.
Yeah.
We're 100% cool with everybody. We try, but if we see somebody's just really like not cooperating, somebody that we don't work with, they're just not like-minded.
Yeah.
Like, that's you.
Exactly.
Go somewhere else. There's
It's
plenty
like-
of people that'll do your 2% commission.
Yeah,
payouts.
exactly.
You know?
For sure. And then what would you say, obviously, from what you're telling us, you creating a team has helped you level up in your business as well,
Oh,
right?
100%. Yeah. I mean, I always like, my goal is to like make sure that my team is taken care of. And I think the way I do it is like, I always like every quarter I look at my schedule and I'm like, hey, is there anything that I can delegate? Right? Is there anything that I can pass on to my team?
Mhm.
And so, because it's like you can never delegate enough because once you delegate that task, it's like you're going to move on to the next thing, right?
Right.
It's like right now I'm trying to acquire practices.
Okay.
So I was like, I don't have the time to research practices. Like I got to look at where they're located. I got to look at how much are they charging per tax return? How many clients do they have? And so it's like, for me to be able to do that, I got to delegate some of these other marketing stuff that I'm doing. Right. And so so eventually it's like, dude, I don't even want to be the marketer anymore because I'm just acquiring firms.
For sure.
Yeah.
And then once I'm like have a team of now I'm going to put someone else in place to acquire firms because now I'm doing something else.
Right.
Right. You're always moving on to the next and big better thing, which means you got to continue to delegate, which means you're going to have a bigger team.
Yeah. I got you.
And that's how you get to the next level in your career.
Yeah, exactly. And so you got to have, there was one, my coach, one of the things that he said that stuck with me because I was like, man, I want, especially in the beginning, it's like, I want a big team, but I was like, I can't afford a big team,
Yeah.
And he's like, oh, well, you got to buy yourself time. And I was like, buy yourself time? What does that mean? Like, buy yourself time? And I was like, dude, that makes a lot. And now I know what buy yourself time means because every time I run payroll, I'm like, damn, this is all the time that I'm buying.
Right.
It's like a $50,000 payroll every 2 weeks. So I'm like, that's all the time that I'm buying. So it's like that's how you create more time is by buying time.
Right. 100%.
So let me ask you this. I want to backtrack a little bit back to like tax returns and well, not really tax returns, but savings on taxes, right?
Yeah.
have you ever advised any of your clients like, hey, dude, go buy some property. It's going to save you some money on taxes. I mean, what are your thoughts on real estate, and does it even save you money on tax returns? I'm a real estate professional.
Yeah.
I'm not a CPA. So what are your thoughts on that?
Real estate is the best strategy to help someone actually legally avoid having to pay tax.
Okay.
I mean, if you look at, this is like number one nugget right here. So if you look at Amazon and you look at Donald Trump, which I mentioned earlier, they're using real estate as a strategy to pay $0 in taxes. The way they do it, let's say, Donald Trump is a good example, or even Amazon. Let's talk about Amazon. So Amazon, what do they need in order to store their inventory? They need warehouses, right? So when they buy a warehouse, let's say that warehouse costs, I don't know, $5 million, right? So they buy that warehouse. Well, normally, if you don't like have a CPA, which if you're making that much money, you should, but you would have to depreciate that property over 39 years. So if you do the math, I mean, I don't know how to do math. I got to use my calculator.
Go for it. Go for it. Pull it out. Pull it out.
All right. So if you do $5 million, right? Let's say the value of that land is, let's say it's $1 million, because the land you cannot depreciate, just the building.
Gotcha.
So let's subtract $1 million from 5 million. That gives you 4 million, right? Mm-hmm. So if we divide 4 million by 39 years, you would still get a depreciation deduction of about 102,000 a year. But if you're making a lot of money, 102,000 is not really a lot of money. So then you're like, oh, damn. So what you can do, for example, is a strategy called cost segregation. So with cost segregation, you'll actually have you'll hire engineers that will come to the actual warehouse, and they'll be like, all right, well, this has, flooring that's only going to last maybe 5 years. It's got an HC unit that probably only has a life of maybe 7 years. So they start separating everything into smaller lives.
So breaking it down, basically.
Breaking the warehouse down into smaller components. Well, the best part is that anything that has a life of 15 years or less can also qualify for that bonus depreciation, like the vehicle. So that $4 million, normally, if you don't do it at cost segregation, you're only going to get 102,000. But let's say of the 4 million, they say half of it is going to last 15 years or less. So now you just got a $2 million deduction on your tax return in year one. So if you made $2 million and you bought a building for $5 million, you just wrote off all your income, and now you've made $0.
Nice.
And you could have also financed the whole building. And that warehouse is going to make you money anyway.
Yeah.
So it's like, and you can literally do that strategy year after year. Like, we'll buy another warehouse, and then next year, and then just zero out your income again. Yep. And you just create all these paper losses. And then and all these paper losses, what happens is that they carry forward to future years.
Yeah.
So you don't need it if this paper loss was big enough, and maybe in the next year you don't have to buy one because it carried over to the next year and it was enough.
Okay. So real estate is very similar to where you can break it down. Kind of, we see the life expectancy of different components, and then basically just kind of write it off and utilize that for the following years to come. So, because I know Donald Trump is a big real estate guy. He buys apartment buildings, and
he's got his own hotels.
That's where it's at.
The Trump hotels. So I mean, that's what he's doing. Is like he's buying these hotels. He's buying all these different apartment complexes, doing cost segregation studies on them, and then just wiping out his income with depreciation. And then when he can still qualify to go buy more apartment buildings because they're going to add it all back. So you can do that if you're not obviously Donald Trump. You could do that on a smaller scale, right? You could just start with a single family home. Maybe it's a 4-unit apartment building, right? Something smaller, but you start to get your taste, and then you're like, dude. And the best part is, it's like W-2 employees normally they don't get any write-offs, right? Because it's normally the independent contractor or the business owner that get to write off you can write off their expenses. So W-2 employees don't get that. But if they become a real estate investor, they can use those depreciation losses to offset their W-2 income. Because normally W-2 people don't get anything.
Right.
So now it's like, hey, by me becoming a real estate investor, now I'm able to actually get bigger refunds and use that money to buy more buildings. And then you start to build your wealth.
Yeah.
And that's what a CPA can do for you is like, man, it's like if I wouldn't have done this, I would have never grown my business to where it is today. So instead of thinking of a CPA like, oh man, that's an expense or a cost, it's like, dude, I would all of our clients have been with us 5 to 7 years. Like they actually contribute a portion of their success to our advice, and that's what makes us super proud. That's why we go to work every day.
For sure, absolutely. I have one more question. Okay, so, and I think this was important because a lot of my agents in the office are actually doing this, including myself. So I actually have this question.
Yeah.
And actually, one of my viewers has this question. Okay. So obviously, when you're starting to build a team,
Yeah.
I think one of the biggest struggles is like, okay, how do I pay this person that I'm hiring? Right.
Yeah.
So this is a question from one of the viewers. Okay. So shout out to Mario. This is his question. I plan to hire producers, not CSRs, in the near future. Depending on the contract, there are some producers that ask for salary plus commission. So he does insurance. Okay. Do I need to provide those employees with a W-2 or a 1099? And would you recommend offering bonus kickers instead of commissions as an incentive for those producers that want a base salary?
Got it. So if they have a salary, basically meaning they're going to get paid every 2 weeks, they have to be on W-2.
Okay.
Because you have some kind of control, right? So when someone's a W-2 versus 1099, it comes down to control.
Mhm.
So like a 1099, it's like you're not going to be like, hey, it's 9 o'clock, where are you?
Yeah.
Yeah.
Right? At 1099, it's like they come to work.
You're an independent
Yeah,
contractor.
Okay.
Okay.
Yeah, exactly. So that's a strictly 1099. But if they're asking for salary plus commission, well, now it's a W-2 employee because they still have to clock in, they still have to clock out, they still have to report to you. There's certain duties that they have to fulfill every single day. So you're going to be required to do that. Now, in related to, okay, should you offer them commissions or bonuses? That's 100% up to you, whatever you want to do in order to make sure that they sign up with you.
Gotcha.
So if me as a regular person, I don't have a corporation established, if I'm looking to hire somebody, do I have to establish a corporation or can I hire them under my name?
That was the next question.
Yeah, you could do everything under your name.
Okay.
So a corporation is not required. You could even, I've met people that built sole proprietorships up to like $1 million. Right. They never formed a corporation. Now that's not a smart move because
I know
they're
a couple of those.
Yeah. I mean, it's not a smart move because they're paying too much in taxes, right? But you could do everything under your personal name.
Gotcha.
Like you can and legitimately, you could have W-2 employees under your personal name. You could have 1099 independent contractors under your personal name. Of course, you're putting yourself at risk.
Right.
But yeah, you could do everything under your personal.
Okay. And then, another one of the questions that I had is obviously, you're the person that the clients go to for advice.
Yeah.
If there's something that they need advice on, but obviously they don't know what to ask for.
Yeah.
Are you the person that goes and dissects them and tells them, look, I need you to stop doing this. I need you to continue to do this. I mean, how do you guys go about giving somebody advice?
Yeah.
And, just kind of go about it that way.
Yeah. So, I mean, the way we do it at our firm is we do what's called quarterly projections. Because the one thing we don't want is like most business owners, like when they do their taxes, they're going to get a bill, right? Especially if you're successful. You've always paid Uncle Sam. You're not going to get a refund. Refunds are for like W-2 employees.
Yeah. I used to look forward to tax season.
Yeah. Right?
It's not anymore.
Not anymore. Yeah. So it's like, the last thing we want is for them to have a surprise. Like, a surprise you owe 50 grand or surprise you owe 200 grand. That's the last thing we want. So what we do is every quarter we meet with you and say, hey, based on how well you're doing, this is what you're going to pay. So if you don't do anything, you're going to end up owing that in tax. Have you thought about purchasing a real estate building? Have you thought about you need a vehicle? Have you contributed to retirement? And then we'll just give them options, right?
Yeah.
Because some people don't want to buy a car. Some people don't want to invest in real estate. Some people. So we just tell them, okay, these are all the different things you can do. Which ones do you want to do? Because if you don't do anything, this is how much you're going to pay.
I got you.
That actually is a good point because we were talking about that in one of the meetings where there's realtors here in the office that make a lot of money. And it's one of those things where they know that if they make over a certain amount, they're going to hit another bracket and they're going to pay a whole lot more in taxes because they're not working with a professional.
Right.
So for them, they're like, okay, I think I'm good at making $150,000 a year because after I hit 150,000, then I'm on a whole nother bracket.
Yeah.
Pretty much. Right.
Yeah,
so
be screwed.
There are people that are just comfortable with saying, okay, I'm only going to make this. So if I made 150,000 for this first 6 months, for the next 6 months, I'm good. I'm not going to do anything because I don't want to have to pay the taxes, you know? So in a situation like that, it's pretty much one of those things where I think at that point in your career, you should already, talk with somebody like yourself because obviously you're going to be the one to tell them, you know what, you could make 200,000 and I'll show you how to save your money.
Yeah. And I think, nothing against those agents, right? It's just like, hey, do you want to stay at 150 forever too?
For sure.
Right.
It's like, do you not want to get to 300? Do you not want to get to 500? Do you not want to get to $1 million? It's like, dude, there's levels to this game.
Absolutely, yeah.
It's like you're gonna just, it's like a scarcity mindset. It's like, oh man, I don't want to get to 250 because then I'm gonna be screwed on taxes. It's like, dude,
it's limiting, bro.
Yeah, it's limiting. It's like, dude, let me get to 250, hire a CPA because about 250 I can afford one now. So it's like, let me get to 250, and now I'm paying less taxes than the one that's making 150. Right?
Yeah.
I'm paying less taxes than him, and guess what? Since I'm paying less taxes, I have more money to reinvest back into marketing.
Yeah.
I'm gonna beat now from 250. I'm gonna get a 500 because I have more money to reinvest.
See, and we talk about this a lot, bro.
Yeah.
Our Hispanic community, unfortunately, they're very, I guess, knowledgeable when it comes to these kind of areas.
Right.
I mean, uneducated is what I would say, right? They're uneducated because they don't have the education to basically, allow them to understand what a CPA is, right? And then once they hear the price points, like you said, like, oh, it's a little too much for me, man. I'm not gonna spend that much money. And I like that you mentioned last time. Well, my services pay for themselves.
Right.
How exactly does that happen?
Yeah, I mean, it's just for example, let's say, we see business owners like this all the time, and it's sad with, especially in the Hispanic community, right? Like, let's say someone does their taxes, like let's say someone's at 150, right? And they're used to, let's say, paying 20 grand every year, right? So they're just like, oh man, I don't want to pay more than 20, so I'm just gonna. So they get, like, complacent, right?
Yeah.
So making 150, and they never grow just because that's what they're
content
used to.
with.
They're content, right? So they're not gonna get out of their comfort zone and things like that. So what I do is like, hey, well, what if instead of paying 20, you could pay 0, and right, and then I'm gonna charge you, let's say, 2,500 a quarter, which is 10,000 a year. Well, would you be willing to pay me 10,000 to save you 20 grand? Now you're gonna pay 0. It's like you're gonna pay 20 grand if you don't work with me. You're gonna continue to pay $20,000 to the IRS every year.
Right.
Would you rather pay me 10,000 to save 20? In other words, would you rather give me $5 to give you $10? Who wouldn't? Right? So that's how we pay for ourselves. It's like, not only are we paying for ourselves, we're giving you an ROI. Because if you wouldn't have worked with us, you're going to continue to pay 20 grand every single year. Well, I can have you pay 0. Yeah, there's a fee to it, but it's less than the 20,000 that I'm saving you.
Gotcha.
So that's what we do. We turn $20 bills into $100 bills.
Gotcha.
That's a good way of putting it. And one of the questions that I actually did want to ask you is, what's your take on that whole Cash App, the Zelle, the Venmo? I mean,
yeah, because a lot of people are scared, bro. When we're like, "Hey, do you take Zelle?" Nah, we're gonna get a haircut from our barber. Nah.
Yeah,
we used to Zelle him all the time, and then out of nowhere, just the new year came up. He's like, you know what? I'm not taking no more Zelles just because
that rule that they're saying that I don't know if it's already out, if it's effective.
Right.
Basically, I guess if you get Zelled more than $600 within a certain time frame, you got to report that. Well, how's that?
Yeah. So basically, the IRS announced last year that if you use any payment apps like Zelle, well, not Zelle, but like Venmo, Cash App, and you receive more than $600 during the year, you're gonna get 1099. So whatever income you made. Right. And again, it's just that scarcity mindset is like, damn, now I'm going to have to pay taxes on this. Right. So my advice is like, don't be afraid to report all your income. Don't be afraid because then now you're going to qualify for a loan. And if you're worried about like, oh, I'm going to get raked with taxes, don't be afraid also to cough up a couple $1,000 to get the advice that you need that's going to save you all that money in the future. It's like, you got to pay for knowledge. You got to pay for advice. Like, I had to pay 10 grand for coaching. I had to pay 25 grand I wouldn't have got that for free.
For sure.
You got to be willing to invest into a CPA that's like, dude, now I'm not afraid to take Venmo. I'm not afraid to take Zelle. I'm not afraid to, like, dude, pay me with whatever you want. Pay me with Bitcoin.
Yeah.
I just want to get paid.
Hey, that's good that you brought that up. That was our next question. What are your thoughts on that, bro? Crypto. I mean, have you ever got paid with Bitcoin, first of all?
I haven't. Although I had some money invested in Bitcoin. I cashed out, lost some money because I bought at the wrong time.
Oh, gotcha. Okay.
But I know I have a client of mine who bought Bitcoin like maybe 8 years ago when it was like $750 a coin.
Wow. Oh, nice.
So I mean, he's living in like Laguna Beach right now.
Oh, I bet.
Enjoying the life, bro. I mean, the way I see Bitcoin, it's just and the IRS sees it that way too. It's like basically a property, right? So it's like you're buying, like, let's say, real estate, but it's digital real estate.
It's digital, yeah.
Yeah, so it's like it's usually gonna either go up in value or go down in value. So when it goes up, you want to cash out, get the money out, right? If it goes down, then you're gonna lose money. So it's just a way. But the cool thing about Bitcoin is that it could actually be exchanged. It's not like real estate. Like, damn, it's gonna take a 45-day escrow to be able to cash out. It's like you can cash out in 10 seconds.
Yeah.
You know, so it's an actual coin, but it's an actual property as well. So I'm not a Bitcoin expert, but I just know like the fundamentals that I had some money invested because I like to tap myself into everything because it's like I want to know what's going on in the world, you know, but I'm not gonna put all my money into it unless I really believe in it.
For sure.
But I mean, I understand. I could receive payment in Bitcoin if I wouldn't take it away if someone's making a pay. I'd be like,
sure.
Why not?
You're not opposed to it.
No, definitely not.
Right.
Ooh.
Pay me whatever.
Yeah, pay me whatever.
Talking about that, bro, just because a lot of these, and then this is a little bit more on the personal side, all right? Getting away from the statistical stuff.
Yeah.
Your relationship with your wife, man. Obviously, you as a entrepreneur, you've been working your ass off for, again, you said you've been in the business for how long? 7 years?
7 years.
7 years. So 7 years is not a little bit of time.
Right.
In those 7 years, obviously you've been with your wife the entire time. How did that affect your relationship, bro, in a sense where, obviously, bro, you probably weren't always home at 5 o'clock.
Right. No, definitely not.
Did that affect the relationship? How did it affect your relationship? How did you overcome that?
Yeah, I mean, it's not easy, bro, to be honest. Like, especially, like, you know, she wants, like, there's, like, the 5 love languages, right? And so one of the love languages that everybody has is quality time, right?
Sure.
So everybody expects that, especially if you want to have a relationship with, if you don't give her quality time, eventually it's going to end up in a divorce, right? Because it's like, if you're not pleasuring her or like giving her, even if it's just like, you know, just giving her a hug or talking to her, listening to her, whatever it is, it's like, if you're not giving her that attention, someone else will.
Yeah.
So it's like, you have to make that time. But in the beginning, we all have like priorities, right? We got a business and then we want to see it succeed. And it's like, I was working 7 days a week in the beginning, and it did affect my marriage in the beginning, you know, but the best part is that she was supportive.
Yeah.
And I had to have a conversation like, hey, you know what? It's going to be hard. It's like, because I don't have like the money to hire team members right now. Like, and we have a lot of clients that I have to serve. So like, hey, I promise you that this will reap rewards in the future. Like, just, you know, be patient. Be patient, stick with me. And yeah, and then eventually I started giving her a little bit of time. And then once we had more kids, it's like I got to give her more time because she needs help with the kids.
Right.
So it's all about conversation, communication. Just like you communicate with your team, you got to communicate with your spouse. Because, you know, if you got to deal with shit at home, it's like, it's not going to help your business.
Oh,
like,
yeah, no doubt, bro.
Yeah.
No doubt, man. I think that's one of the biggest things, bro, when you're a business owner and you're already dealing with a bunch of shit at work.
Yeah.
You got all these problems, people trying to sue you, and then you got to go home and fight with your spouse over some bullshit. You're like, fuck, man, that's the last thing that you want to hear, you know what I mean? So it really does affect you because you're thinking about that all day during work. So it kind of just correlates with one another, right?
For sure,
So,
yeah.
I think that's huge, bro. Now, I think another question that I want to ask, because we talk about this all the time. Obviously, you're trying to expand.
Yeah.
You're at that point, bro, where, you know, if you want to get to that point where you want to be in, you know, 25 different locations or you want to own 25 different locations, you're not going to be in Bakersfield all the time, bro.
Right.
You got to travel. You got to hop on the plane. You got to go to Delaware. You got to hop on the plane, go to Florida.
For sure.
How does your wife respond to that, bro? I mean, does she let you? I mean, like,
yeah.
Do you go solo? Do you get a permission slip sign? Wear the apron for a week so you can wash dishes, make her happy, and then you roll out? I mean,
yeah.
How's that?
Well, I mean, there's that saying, right? It's better to ask for forgiveness and permission, right? So sometimes
I'm gonna hop on a plane and come back, and I'm sorry, baby, I didn't mean to do that.
So I jumped on.
Sometimes that's what it takes, bro. But I think at the end of the day, is you gotta take care of her. You know,
Absolutely, yeah.
You gotta take care of her, and it's also knowing like there's certain like, for example, like now it's like Sunday is like I'm dedicated that to the family.
That's
like,
a family day.
That's a family day, you know. So it's like no matter if I have to travel, it's like I'm gonna be back on that Sunday to spend time with my kids.
For sure.
Like I'll pay that extra plane ticket to be back. You know, because it's like, yeah, I want to, and then the best thing too is like once you start building a business, it's like you have a little bit of money, so then it's like you can even like leverage people. Like, hey, can you take pictures of that property for me if you're into real estate? But you don't have to actually be the person to be there.
Absolutely, yeah.
It could be someone else, right?
Delegating.
It goes back to the team. It's like eventually, I mean, if there's Starbucks, right, being built everywhere, do you think the owner is going to every single location?
Or serving the coffee himself?
Yeah,
hell no.
No way, right? He's even having other people like, hey, this is a good spot to build one.
Right.
Right. So eventually you want to get to the spot where it's like, I don't have to travel anymore.
For sure.
I have someone else doing that all for me. But in the beginning, of course, it's like, dude, it has to be you.
Yeah.
And so you just have to communicate with your spouse, like, hey, you know what? And then it's just making arrangements in your lifestyle. Maybe something has to go, you know, whatever it is. If it's, if there's a certain passion that you have, you might have to like, cut that off for a little bit in order to pursue this new mission.
I got you.
Because it's like, you only have 24 hours a day. So it's like, you just have to know your priorities.
For sure.
Yeah.
So obviously you guys were like in the beginning of your career, it obviously wasn't too easy for you. Fast forward to now, when you go about, being there for your family and your wife and, still having to run your business, do you think that that's changed completely from where you were in the beginning of your career?
Oh, 100%. 100%. Like, it's funny because I had this conversation with my grandparents, and my grandparents, they were like, because they see me like go to this successful business, and they're like, hey, mijo, it's not all about the money. Like, hey,
I love typical Hispanic response, man. It's funny,
right? It's like, it's not all about the money. Like, you got to remember to stay humble. And I was just like,
no te olvides de donde vienes.
Yeah, exactly.
No.
Yeah, exactly. And I was like, abuelita, I was like, if it wasn't for how much I've grown, I wouldn't be here with you right now. Because if it was just me, I would be working right now. But I'm still making money being here with you.
Yeah.
And then it's just kind of like that light bulb effect, like, oh wow, you're right.
Yeah.
It's like again, it's like they're not educated on like what teams can do and things like that. And so it's like I haven't forgotten about that.
Right.
That's still important to me. That value that you taught me as a kid, it still remains in me.
Yeah.
But that doesn't mean that I'm going to continue. I want to make more money.
Yeah.
It's like actually the more money I make, the more free time I have.
For sure.
It's like because now I have a bigger team.
Yeah. If anything, that's why I do what I do, because I want to spend time with my family. I want to be there for them. Any important event, bro, if my kids are getting awards, if my kids are, anything, I can be there for them, and I'm still making money. So that's something that, I think it's a very common Hispanic mentality to have. It's like, don't forget where you come from. Money's not everything. I'd rather, you know what I mean? I think it's naive, but unfortunately that's the case, bro.
It's just the way that they've been taught.
Right.
Know?
Yeah.
Right.
We've been taught as kids that like, money is the root of all evil, right? And actually, Robert Kiyosaki said, it's not that money is the root of all evil, it's the need for money that is the root of all evil, right? So why do people break into banks? Because they don't have money, they need money, right? Someone that's rich and has a bunch of money, they're not going to go break into a bank. They've got plenty of it.
Yeah.
What's that one song? How does it go? It says, money, they say money is the root of all evil. I say money is the root of all people. Badass. I think that's true, bro.
Yeah. Sure.
We were talking about it last time too. Like I always say this, and I saw it on another podcast the other day. It's like if you're an asshole, dude, prior to getting any money, and you get rich, you're just gonna be a rich asshole, bro. That's just the way it is, And even if you're not an asshole, but like deep down inside, you really are.
Right.
And once you start making a shit ton of money, it's just going to bring out who you are as a person, who you really, truly are.
So you're still going to be a rich asshole.
You're still going to be a rich asshole. I mean, that's just what it is. So I think it really is the root of all people, Money can be used for the good or the worse, depending on who you are as a person,
Yeah, it just makes more of who you really are.
For sure.
Yeah, 100%.
Absolutely. How would you say money has changed you as a person? Like, would you say that you're the same person that you were 7 years ago?
Yeah, I mean, it's made my life so much better. Like, It depends what you use your money for, right?
Yeah.
Because once you have money, it's like, what do you want to spend it on, right?
Mm-hmm.
And so for me, it's like the most precious thing that I could spend my money on is like, especially with having 2 daughters at home, it's like on experiences. So like, and that one thing that I learned is like the most happiness that you can get is like, even if we think back to our childhood, like our happiest days, it's like we have the happiest days when we have a certain memory, right? Like, oh, I remember when I played football, or I remember when I played soccer.
When I went to Disneyland.
When I went to Disneyland, yeah. So like, those are all memories. So it's like, why not create those as adults too?
For sure.
It's like, dude, I'm like, I just went on a cruise with my entire team. It's like where I'm about to take them to go see Fuerza Regida, my 2 managers.
Sign me up.
Yeah.
JLP.
Yeah, so it's like, dude, I want to create those memories because that for me is like where I want to spend my money.
For sure.
Yeah.
And I get to write it off, by the way, too. So
nice. Shout out to the team, tax write-off. Right? That's good, man. And honestly, we do the same thing. We do a lot of little events here with the company. We try to like show them a good time, create memories and things like that. I do it because we also love to do it.
Right.
But at the same time, it is something that, you are creating those memories. We have the opportunity to do it. So we take advantage and we actually do it,
Yeah.
So I'm glad you brought that up, because I think that's important, man. Especially when we're big on this. You're going to see us drop a vlog pretty soon.
Yeah.
I'm pretty sure you've seen it. I just did a birthday party.
Yeah.
Actually, he threw it for me.
Yeah, I was the manager.
He was the manager for that birthday party. But anyway, I'm a big believer in if you work hard, you play hard.
Yeah,
You know what I mean?
yeah.
And that party, even though it was my birthday,
Yeah.
I did it for the people. You know what I mean?
Yeah.
Because a lot of the people that went, they're business partners, people that we do
It
business
was
with.
all nothing but business partners.
Literally, bro.
The way that when I went to go and throw this party and I was inviting these people,
Yeah.
I was thinking I don't want just anybody to go to the party.
Right.
I want nothing but business owners.
Yeah.
to
We didn't
go.
even invite my family, bro. Nah,
We did, but it was very
a little bit, yeah.
Right.
and because of the same reason that we knew who we were trying to attract, and
Right.
we wanted people to go out to this party
Right.
and consult with one another. And it's like, okay, what do you do? Oh, I'm an owner of a tire shop. Oh, what do you do? Oh, I own a
Kind of like networking.
Yeah.
To be honest with you, literally, it was just a more crazy networking event, if you would call it that. You know, and we just happened to vlog the whole thing, so we're gonna be dropping that vlog pretty soon. Again, you know, it's gonna be a little crazy because we're drinking, taking shots and shit like that.
Yeah.
But the reality is, you know, behind that, dude, we work hard as fuck. Everybody there
Yeah.
works hard as fuck. Everybody there.
We literally haven't even taken a vacation all year.
Yeah, that
because
was-
we're just back to back to
Yeah.
back to back.
Yeah.
For sure.
Just 1 week, you know, going crazy. So, I mean, honestly, it was a good experience. I'm glad we spent some good money on that party,
Yeah,
too,
I
bro.
bet. I bet.
So, I'm going to have to talk to you pretty soon on how we can write all that shit off.
You already made a deductible right now, but just by everything that you said, because it's like it was mostly business people at that
For sure.
party. It's like, hey, if it wasn't for that party, you probably wouldn't have, you know, improved those relationships with those
100%.
customers or those vendors, right? You wouldn't have made a deal. It's like, and so the biggest thing that I always tell my clients is like, if you get audited, it's like you don't want to be the one to like represent yourself. Like you want to have a CPA because it's all about how you tell the story to the IRS.
For sure.
If you tell them like, oh, I had a birthday party and I wrote it off with my business card, they're gonna be like, it's not deductible. And you're like, oh, I had an event and I invited business people at that event. And yeah, we happened to have tequila and we had a good time, but it was mainly to network.
Yeah, when they
It's
look at
now-
the statements, huh?
Yeah, it's not it's not a deductible expense.
$700 on bottles. Costco. 4,000 on a banda. That's crazy.
Yeah, it's like, dude, that's all deductible, but it's all about like having like you got to be able to tell that story to the IRS agent and have them like not say, oh, this is bullshit, right?
Right,
You want
for
them to say
sure.
like, dude, this is like legit,
Yeah.
right? And the more, and it's like you want to have evidence to back it up. It's like, dude, look, this is my business partner. Look, I have a vlog too. I can show you the vlog. You want to see the vlog? Look at all the business people over there.
Yeah.
For sure.
These are all my partners. I'll even have them testify in the court saying that it was for business.
Nice. There you go. So, you know, Joel, I think we're pretty much wrapping it up here. How far are we into this right now?
About an hour.
It's been a pretty good podcast so far.
Yeah.
I'm not gonna lie.
Honestly, I didn't think it was an hour.
I didn't think it was an hour. I thought it was gonna
It
say
was
like
like
30
30
minutes.
minutes.
But we're about to finish it off here. So
Yeah.
let me ask you this too before we end it off. So you're located obviously in Bakersfield,
Yeah.
right? For our Hispanic community, because I'm pretty big on serving our Hispanic community. I think one of the biggest things that we do, obviously, I'm pretty sure you've seen it. We do first time buyer seminars. We don't discriminate, bro. Obviously, we have a thing called equal housing opportunity. We'll never discriminate. However, I am very big on serving our community.
Yeah.
What advice would you have for them in terms of, you know, again, you know, looking for someone like you, and why should they go this route again for the ones that have, you know, money they're making? Because I know a lot of restaurant owners, bro.
Right.
They make good money,
Yeah.
but they're sole proprietors, and I'm like thinking to myself,
Oh, wow.
like, dude, you need to be making, you know, different kinds of moves, you know.
Yeah.
What advice would you have for them, like in terms of, you know, consulting with someone like you? Or
Yeah, I mean, it's like it all starts with a conversation, right? So it's like that the best thing that you can do is like just pick up the phone and say, hey, you know, I'm interested in just hearing you guys what you guys have to say, right? It doesn't cost you anything besides maybe your time.
for sure.
Yeah, but you have to like say, you know, you also have to be the one to be like, hey, you know what? I value my time enough to actually be present and attend, and it's all the knowledge you're gonna get, right? And it's like, I mean, if you think about that, those restaurant owners, you know, when they started their business, they probably had some mentor, they had someone like that sparked an idea for them to even have that restaurant,
Mhm.
right? So it's like, hey, you need to continue to get that advice. So it's like, hey, you know what? Now I need like a tax advice. I need a professional. So it just starts with a conversation and just say, hey, you know what? Call in the office or follow me on Instagram, send me a DM. Hey, Joel, how do I build a relationship with you? Or how can I learn more about your services? That's how it starts, right? And then it's like when someone reaches out to you, like, hey, Anthony, how do I buy a house? Right? And then you have your system. You're gonna tell them this is what the process, right? But it just starts with that simple question.
Initiative, huh? You have to have initiative.
Yeah,
to
you just
go
have
out
to have
there.
initiative. Yeah, and it's like And it's like once you ask that simple question, it's like before you know it, it's like, dude, I'm saving all this money. I have a corporation. It's like now I have a CPA. So it's like, dude, but it starts like you said with that initiation.
So taking initiative. So the advice that we would have is like ask.
Yeah.
Ask,
100%.
right? Because I think that's one of the biggest problems that we have even today, bro. People are afraid to ask, and I'm like, dude, you don't lose anything for asking.
Yeah, I literally tell people, and I personally try to live by this. If you don't ask, you don't get.
Yeah.
It's like that saying. How does that saying go? Closed mouths don't get fed.
Yeah,
you know what I mean. And I'm big on that, so I think that's important. So again, just take initiative. Ask. What's your Instagram, bro? So we can put it here on the video.
Yeah, so you can follow me on Joel Sandoval CPA, Joel Sandoval CPA, and then you can watch literally like my 400 videos, and then without a consultation, you'll probably know more than
be knowledgeable.
My videographer who reports on my videos like knows more about taxes than like most people.
So he's basically a tax preparer.
Yeah. You gotta put him on the team, bro.
Yeah, it's crazy like the amount of knowledge that he has. So it's like if you have time, just consume my content, and then once you feel comfortable, just reach out and say, hey, bro, how do we start this relationship?
For sure. Yeah. And I'm glad you mentioned that, bro. Take initiative, guys, because I've had a lot of people where they message me, they're like, you know what? I'm looking to buy a house. It's a simple question. And then 30 days later, they're in a house. They're like, dude, I just messaged you and I'm getting keys to a house right now.
Yeah, fast forward to a month later.
And I'm already getting my property. Like, that's all it really takes. You don't lose nothing. Obviously no obligation, right? You don't charge for consultations, anything like that.
It's free.
And it's the same thing with us. You know, we don't charge. Just get knowledge on it. See, educate yourself, and if you want to make a decision, then that's totally up to you, right?
Yep. Guys, get comfortable to ask questions. That's
all
it is.
Again, guys, I think that's pretty much it for this podcast. Again, we have the pleasure of being with Joel Sandoval, CPA here in Bakersfield, very well-known guy. I know you just did a podcast with some famous guy. What's his name?
Yeah, with Brad Lee.
With Brad Lee. Yeah. So honestly, go check out that podcast. It was pretty dope. But yeah, again, it was an honor to have you, bro. I think we have a lot of good information here today. And hopefully that, you guys get to watch this. You guys get a little bit more education when it comes to this stuff. And again, just remember, take initiative. Thank you, Joel. Do you want to say anything before we end off the podcast?
No, I just want to, again, thank you for, taking the time for inviting me, bro. It's an honor. It's also, I'm just like motivated by seeing your growth too, bro. Just in the last year alone, bro. Like, congrats on the Lambo, bro.
Thank you. We're going to tax write that motherfucker off for sure.
I mean, it's just like you're an inspiration, bro, to the Hispanic community.
For sure.
So it's like we are influencers because we're influencing the Hispanic community and everybody else, bro. So I just want to say, thank you for having me, bro. And it's like, keep doing what you're doing, bro.
Absolutely. Thank you, bro. And just real quick before we end it off again, I was on his podcast. That was the very first podcast I had ever done. So I appreciate you for having me on. That meant a lot, bro. And that's why I'm like, you know what? I see what you're going to do. You put me on game, bro. I'm going to be honest with you. You put me on game. I had already been thinking about doing this. And I'm like, shit, once I went, I told my brother, I'm like, damn, bro, I actually like this. So if you guys want to check that out, I'll put the link here in the description below so you guys can look at that podcast with me and Joel. So it was the other way around. He was interviewing me, which was pretty dope.
Yeah.
But I appreciate you, man. I think one of the biggest things that we've talked about is giving back, bro. I want to give back to my people. You know what I mean? I have never been ashamed of where I come from. I have never been ashamed of how I grew up. I'm sure you know that by now. Yeah. But I mean, honestly, this is the least that I can do for my people, bro. Bringing back, educating them on real estate aspect. Now, bringing people like you onto the show. I think it's pretty awesome, bro. So again, thank you so much, Joel. I appreciate you. And that's it for today, guys.
We do this for you guys.